try to find investors that are currently investing with them. I'm gonna, do research of them on LinkedIn, find out how many deals they've had.
Hello, and thank you for joining us today on the Gentle Art of Crushing It show, where we focus on learning and sharing with our listeners all there is to know about how to create success in our lives. This show stands on the shoulders of giants. Our mission is to empower and inspire our listeners to create the life of their dreams whilst having a blast in the process. Let's celebrate life together. Welcome to the show.
All right. Welcome back to the Gentle Art of Crushing It podcast, Passive Investing Edition. My name is Randy Smith, and I'm your host today. And I'm really excited to have Justin Rathbun on the call or on the podcast with us. Justin, welcome to the show.
Thank you. I appreciate it. Glad to be here.
Outstanding. Well, hey, why don't we just jump right into it? Justin, can you kind of give us a quick overview of your background and your history and experience and what brought you to the passive investing arena?
Yeah, so I am currently a finance director at a auto dealership here in the Phoenix area. So I am a busy professional where I don't have a lot of time to, I look at real estate deals and whatnot. So I work a lot of hours, and I just really wanted to find a arena where I didn't have to use a lot of my time to invest in real estate. And that's kind of how I came across passive syndications.
Awesome. Okay, so I know some folks in that space, and my understanding is you guys work a ton of hours,
Yep.
a lot of nights and weekends, and but you do fairly well financially on the W-2 front.
Yes,
So
yes.
interesting.
So
Okay.
that's how was it. I about 7 years ago, I was looking for an avenue to be able to invest in real estate, but just did not have the time to go out and look for
Okay.
properties and whatnot. So, my W-2 job does take a lot of my time. So that's kind of how I came across investing in real estate passively through syndications. So it's been really good for me. I've been doing it for about almost 6 years, and I love it and want to continue doing it.
Fantastic. Okay. So that's a little bit different than a lot of the folks that I interview here. Some folks will have some background in the active real estate investing. Other folks will have more of an active traditional investing. So this is that ideal avatar of the individual who does very well in the W-2, doesn't have the time, and really just wants to get all of the benefits of real estate without having to swing a hammer or deal with tenants and toilets and those types of things.
Correct.
Okay.
Yep. It's
Okay.
yep.
Okay. So 6 years you've been doing this. Can you give us an idea? Tell us about like what your experience has been up to this point, and like how many and what different types of assets that you're
Yeah.
in. Just tell us a little bit more about what you're doing
Yeah.
there.
So the first deal I got into was, I want to say, in late 2016. I
Okay.
really didn't have much knowledge about real estate syndications. I'm a big follower of Grant Cardone, which I'm sure you've heard of him. And
Oh yeah.
and he was actually online, and he's like, "Hey, I've got a deal that I need some partners on." And I just kind of looked into it and spoke with a few people on his team, and I had finally saved up some money to be able to do an investment that was not your typical stocks, bonds, whatnot. I wanted to do something really different than that. So I kind of just stumbled upon it and spoke with his
Mm-hmm.
team. I didn't know a whole lot about them, and
Sure.
invested in my first deal. And ironically, it's been the best deal that I've invested in so far. So yeah,
Fantastic.
it's been really, really good. I'm in 3 different deals with him, actually. They're all Class A properties, very, very nice properties. Most of them are in Florida. I'm in one that's in Houston, Texas, also. And
Okay.
they're, like I said, so I have those 3 Class A properties. I'm also in like some B class properties, which are a little bit more of a older property that kind of has a value add component to it. And so I
Okay.
kind of wanted to have a, kind of I didn't want to be in just like one certain class of property. So I'm in some of those, and then I'm also in like a Class C property here in Tucson, Arizona. So
Okay.
I really like to spread it across all the classes.
Interesting. Yeah. And I think that diversification can be achieved in this arena as well. Not only can you diversify away from your stock portfolio, which, as a W 2 guy, you probably have your 401k
Yep,
and those types of
yep,
things. But you can also start to diversify across asset classes. You mentioned A, B, and C. So different qualities and potential upside even
hmm,
on the value add strategies versus more of a stable. And then you can even start to diversify across geographies and operators and,
correct.
go into completely different asset classes
Yep.
as well. So it sounds like you really bring that into your strategy
Yeah,
too.
yeah, I really like to spread across operators and different states. I really like to focus on high migration states. Pretty much in the Sun Belt is where I'm mostly invested in.
Okay.
I'm in, like I said, properties in Florida, Texas, a couple here in Arizona. I'm actually also in a mobile home park fund, which has some properties in Tennessee and also North Carolina. So I really like to
Okay.
stay in those warm weather states that have a lot of migration of people moving to, and it's been very good for me. And not that I'm not open to other areas, but that's really where I like to
Hmm.
focus.
Okay. Yeah, it sounds like the in migration piece is a big part of your strategy. For the newer passive investor, can you help to explain why you look at those markets versus maybe some where you have some negative migration or out migration going on?
Yeah, I mean, well, one, generally those states, for whatever reason, happen to be good landlord-friendly states, which tends to be
Okay.
really good for, us as an investor and also for the operator that we partner with. Um,
Sure.
and it's like I said, I really like to be in those states where people are moving to rather than moving from. So I do a
Yeah.
lot of research on that to make sure that I am investing in a state that has really good migration going to, not moving away from. So,
Yep.
I look at that. I obviously look at the operator, which is a very big deal to me, and is to
Hmm.
probably most passive investors. And I like to stay in properties that are at least 100 plus units that are decent sized properties, that can afford a little bit of vacancy to where it's not going to really, you know, kill your investment, or your monthly cash flow or whatever it may be. So
Sure.
yeah, that's
Okay.
kind of what I like to stick to, and and then I'll look at deals as they come in and kind of go from there.
Okay. Yeah, no, it sounds like you're looking at a lot of the same things that I do and the things that I instruct or try to educate folks on that due diligence process. You mentioned 100 plus unit apartments. I think you hit the nail on the head with, the bigger and the larger number of doors, the more easily you can spread resources across
Yep,
those. So a lot of times once you hit 100, it makes sense to have an on-site property manager. It makes sense to have on-site repair guy on site as well. So those are the type of things that the added size will give you that you can't get in a 20 unit or a 30 unit
correct.
complex. So
Yep,
good
yep.
stuff. Yeah. Now you mentioned it sounds like you're very methodical with your due diligence process. Can you give us an idea or maybe walk us through what that process might look like from, as detailed as you can from beginning to end to when you hear of a new operator, all the way to I'm deciding to wire those funds. Can you
Yeah,
talk about that process a little?
yeah. So I get a lot of, I've done a lot of not networking in person, but networking really through LinkedIn, and found a lot of different operators throughout the last 4 or 5 years. So I get a lot of
Yep.
deals that get emailed to me probably by the week.
Okay.
So that's why I'm really strict with kind of like what I'm looking for, where I want to invest in, and who that operator is. I'm definitely open to newer operators, but I'm
Mhm.
certainly going to do some due diligence on them. I'm going to try to find investors that are currently investing with them. I'm
Mhm.
going to, do research of them on LinkedIn, find out how many deals they've had, how many have gone full cycle, and just kind of as much information as I can about that new operator, because to me that's number one when you're looking for an
Mhm.
investment, is you want to be investing with somebody that, one, is aligned with really what you're looking to do, and kind of
Mhm.
what your strategy is, and two, where is that property, and is it in a place where there's people going to, where there's jobs, where there's good schools. You're just not investing in an area that could be, not so good, when it comes to like crime and things like that. So
Sure. Sure.
those are really my biggest things. And then once I find that, then I'll, have a phone call with that operator, ask them some more
Yep.
questions, make sure that that investment strategy on what that deal is going to align with what I'm looking to do. And,
Mhm.
once that all aligns, I will obviously move forward and become a passive investor on that deal.
Okay. Yeah. So they're definitely, you've done this a number of times, so you know the things to be looking for. You really keyed on the fact that it's the jockey that you're betting on
Yep.
in this race. And I think that's really important. It's a theme we hear over and over and over
Yeah.
again, that if you vet the jockey, odds are they're going to be able to run the race. So that's great.
Yep.
Now, I'm curious, how many different deals have you been in across how many different operators,
So
approximately?
right now I'm in. I've only been, believe it or not, I've been investing almost 6 years now. I've only been through one full cycle deal. Um,
Okay.
I I am with four separate operators right now across 9 deals.
Okay.
So,
Yeah. So you're getting a good mix of different operators and how they communicate and perform.
yes,
That's great.
yes,
Okay.
which, it's like I said, obviously when you find a good operator, you're going to stick with them, and you're probably going to invest in multiple deals with them. So that's kind of what I found. But again,
Sure.
I know that there's a lot of great operators out there, and I'm certainly open to, potentially investing with new operators also, as long as they kind of have all of the things that I'm looking for in an operator.
Okay. Hey, have you had any negative experiences with any of the operators you've invested with?
Um, I mean, I don't want to say negative, because honestly, every deal that I'm in has never missed a distribution one time, which
Okay.
obviously is a big deal to us as passive investors.
Right. Right.
So, I have invested with a smaller group. It was two guys that were like the main GPs on it, and they kind of had a little bit of a falling out. So one of them kind of dropped out and is not as in the day-to-day operation. So that was a little scary. When
Okay.
you're investing, one, they were a little bit of a newer operator. Two, they're already splitting up within like a year and a half of kind of being in a deal with them. So that part was a little
Yeah.
scary. It has not negatively affected the deal as of to date, but again,
Okay.
they were very transparent about it, gave me a phone call personally. And, like I said, everything's been fine. So I don't want to say it's negative, but it's just a little scary when you get
Sure.
that phone call like, hey, you know what? We kind of have a different philosophy. We're going to kind of go our
Yeah.
separate ways, but, we're putting you and the other investors first in this deal. So don't worry about that. So it was very transparent, which I appreciated. And I'm sure they did that with every investor in the deal. And again, it
Yeah.
has not negatively affected the deal to date. So,
Hmm.
that's probably the only thing I could say. Everything else, it's been a really good experience. As long as distributions are coming in the account every month or quarterly,
Hmm.
and they're being transparent about what's going on with the property. I love getting reports monthly rather than quarterly from operators.
Yeah.
One of them does it
Yeah.
quarterly. I would rather get it monthly, just to,
Sure.
I really like to know what's going on every single month with the property, whether vacancy's gone up or down, if there's issues, if there was, whatever, it's good to know as an investor what's going on with that property when your money's invested in it.
Absolutely. Yeah. And I think especially as we're heading into a different market than what we've had over the last 10 or 12 years or so. And I think communication from the GP groups or from the operators becomes more and more important as we start to journey into these uncertain
Yep.
times. So, it's interesting. There are plenty of GP teams or operator teams out there that are fantastic operators that can complete and execute the business plan, but they might not have the communication skills that I would like to work with. And I'm at the phase of my investment or my investment journey where I would almost prefer to get slightly lower returns, so long as the communication matches my needs and desires, just because I want to know what's going on with my dollars. Now, fast forward 10 years and you have 30, 40, 50 LPs under your belt, and you have confidence built in a team, maybe communication's not as important, but certainly in those early months and early years, I want to know absolutely everything that I possibly can. So it sounds like you and I are in alignment on that one as
Yes,
well.
for sure. It's very
Yeah.
important, like you said, especially early on in the journey of partnering with these operators.
Okay. Well, I'm wondering if we could spend a little bit of time about kind of capital allocation strategy. And, let's say you have 100 grand that you have available or whatever the number is. Do you prefer to spread those dollars across multiple assets, operators, investments, or do you have like a minimum amount you want to put into each investment, or any other strategies around that area?
Yeah, so I really, especially when it's a new operator that I'm investing in, and I'm sure I'm in alignment with a lot of LPs when it comes to this. I want to invest the minimum the first time I'm investing with them, which generally is
Yep.
$50,000.
Yep.
So as the relationship grows with the GP, and I feel great about the investment and things are going well, I will obviously, as other deals come up, I may invest 100,000 into that next deal because I feel really good about the operator. The current deal that I'm in, it could be a really good deal as far as, where there could be some very good value add into it that I feel good could give us a really good profit in the end when it does sell. So if that's the case,
Sure.
if it's got a good potential growth model, I want to invest more in that deal, even if it pays a little
Yep.
bit less cash flow during that process. So yes,
Awesome.
to answer your question, I like to start out at $50,000. I've invested as small as 25,000 with an operator that I've already done business with and done a few deals with. So,
Yeah.
but at the same time, I've done 100,000 on a deal, and the first deal I did $100,000. Didn't even know what the heck I was doing, quite honestly. I just had trust that
Yeah.
my money was
Yeah.
going with somebody that knew what they were doing, and
Yeah.
thankfully, my trust and luck all came together because, like I said earlier, it's been the best deal that I've been in. It's paying me 13% yearly and has since I've been in it. And if it sold today,
Man,
it'd be about a 4.5x return over a 4.5 year span. So,
sign me
yeah.
up. Definitely.
So, yeah, it's,
Yeah.
but they're not all like that, unfortunately. But, I just
Yeah.
got lucky and it happened to be the first deal I was in. So,
Yeah, no, I think that's your journey is similar to mine. I did the same thing. I did 100,000. I did 100,000 from a old 401k on my first deal, and quite frankly, I did it because I didn't even know that I could do less. And something for our listeners to know. Quite often, there's a minimum investment, and if you ask to do less than the minimum, at times they will allow you to do that. And of course, you just don't know that. You see it on a deck, you assume that that's
yep.
it. But what I know today is that the GP team decides what that's going to be, and they can take any amount that they want. It really just comes down to, do they want you as an investor? And I had an interesting conversation with another operator last week that I am now in partnership with, and I asked if they would accept 25 grand. And he said, of course we can take 25 grand. The question is, do we want to take 25 grand? Because generally you're going to have one or two types of people that want to do 25 grand. You've either got the guy like yourself who wants to test the waters a little bit. And if things go well, you're going to bring a lot more to the table in the next deal, which is the type of investor that all operators want to work with. Or two, it's the person who is literally scraping together their last 25 grand. And if things don't go perfectly as planned, they're going to be calling the operator every single week to get an update on what's going on with their 25 grand, even if it's a $20 million raise. So I think we have a responsibility as investors to be good investor partners with our operators as well. And I think the more we bring to the table, not only in dollars, the more benefit we're going to get from that relationship as well. So, yeah, interesting. So, yeah, we talked a little bit about strategy. We talked about asset classes. We've talked about kind of how you spread your dollars around. What other kinds of things about passive investing kind of drew you to them or get you excited about continuing your passive investing journey?
Well, the most exciting thing about it is watching deposits go into my account every month that I don't have to work for. So
Yes.
that is that is the number one thing that excites me about it, and the fact that many of these investments eventually are going to sell, and I'm going to get a return on that investment on top of the cash flow that's been paying me every month, and I'm going to be able to roll that money, which is a lot more than what I put in, into another deal. And it's amazing how quick that money can compound into eventually replacing your current income. And that's the goal.
Yeah. Yeah. Absolutely. And I think that the avatar of the passive investor in your shoes is that seems to be the ultimate goal that most folks are striving for is let's reach this point where work becomes optional. Not you don't necessarily have to leave the W-2, but if it were optional, you certainly are going to walk in there with a little bit more spring in your step on a Friday morning.
Yep.
If you can turn around and walk back out if you absolutely wanted to. So, yeah, it's today is distribution day for me, and I spent a large portion of this morning getting text from my investors thanking me and excited about their first distribution checks, and then I get to go into my bank account and check the box and make sure everything hits. And each month the numbers seem to be getting bigger and bigger, which is, ultimately what it's all about from the passive investing space. So very cool.
Yep. It's very exciting.
So let's talk about kind of what's next for you with the passive investing journey. Do you come into each new year thinking I want to put X amount of dollars aside per year? Do you wait for the windfall, or what does that look like for you?
Yeah. So I have a goal to to enter into one new deal each year without one of the previous deals selling. So I want to at least add one deal a year from just money that I've saved throughout the year, and to be able to add to my portfolio. And then if another deal sells during that time, all I want to do is find another, good one that I can just reinvest those earnings and keep going. So the goal for me, short term and long term, is to obviously, all of these deals will probably turn over in the next 5 years. So I want to go from the 9 deals that I'm in now to at least, I'd say, 15 deals within the next 3 to 4 years. I want to be in 20 plus deals in the next 10 years. And I even want to explore potentially being on the GP side if I can find the right people that align with what I'm wanting to do, and even get on that side of the spectrum also, and not just be a limited partner, but also be able to add value to a team that's part of a general partnership that kind of aligns with what my investing goals are.
Yeah. Yeah. I think it's a fairly common path that I'm hearing from folks in this space that, you get your first deal to go full cycle. You start to see how, even if you did 50 grand a year, if you did 50 per year over 5 years, all of a sudden you've got 250 grand. That's doubling, call it conservatively 4 years, maybe 5 years. That gets extremely powerful at some point. And, it seems like you're similar to me in that you probably are talking to folks about this process. You're excited about this process, and people are probably starting to say, "Hey, tell me more, and how can I get involved?"
Yeah,
And
yeah,
the easy answer is yes. I just want to be part of a GP, and so I can go and help 100 people do exactly what I'm doing. So
yep,
um,
yep.
I suspect, um, knowing you how I do and seeing your path the last few years, I suspect that could happen much faster than you could ever
It
imagine it.
it, it,
So
it, it
um,
definitely may. That's the goal, and
yeah,
like I said, these investments, quite honestly, for anyone listening out there, is the best, safest investment that really you can do, in my opinion. So, it not only does it provide you with cash flow, potential appreciation, you also get tax benefits, which we did not talk about, which again, obviously I'm not a CPA, but there are tax benefits of being just a limited partner with
hmm,
these deals. So there's just so many good things. It's not just you buy a stock, you hope it goes up, you hope it pays you a dividend, and then you sell it for more than you bought it. Like it's just more exciting, I guess, would be the best, and it's much less
yeah,
volatile than the stock market.
absolutely. I think that's a really good note to kind of finish on. You really summed it up perfectly right there. That you get to be in control of your finances and all of the benefits of real estate without having to deal with tenants and toilets, and leave that to the experts,
Yep,
essentially, right?
yep,
Um, well, very good. What an exciting journey you've been on, and
yeah,
I really appreciate you kind of walking through some of those details. This is the nuts and the bolts that the new passive investor needs to hear and needs. I quite frankly, I wish I would have had podcasts. They probably existed. I just didn't know about them before.
mhm.
And instead of ready, fire, aim, I could have ready, aimed, fire, and possibly started this path a little sooner. But yeah, thank you so much for all the value that you brought here.
Yeah, no problem. Glad to be on.
Very good. Well, hey, I do have a few different questions I'd like to wrap it up with.
Yeah.
Um, Being as experienced as you are, can you give a good podcast or a book that you've used to continue your education path on this journey?
Well, of course, yours. I listen to
Of
most of
course.
I listen to most of the podcasts that you've had, and you have a lot of different passive investors with different journeys, which I really
Yeah.
enjoy listening to because everybody seems to have a different journey and path to getting to this place.
Yeah.
But as far as like a book goes, I really enjoyed Joe Fairless has I want to say it's the best ever apartment syndication book, which is
Yep.
really good for a newer investor starting out, just trying to understand the space and what it's all about, and key terms with real estate investing, and it really simplifies things really well for the person starting out. So I would definitely recommend that.
Okay.
And again, I have found so many good people on LinkedIn that are either operators, passive investors, people like yourself who are doing it all. Really, you're I think a limited partner. You're in general partnerships. You're doing the podcast, so you're really doing it all. So. Guys like you are who I'm looking for on LinkedIn, and there's a bunch of really good ones out there. So that's what I would recommend for anyone that wants to learn more about the space and what it's all about.
Yeah. Thank you. I think that's really good advice. Um, Everybody seems to have like a primary social media platform that they go to. LinkedIn was mine as well. I think that's how you and I met.
Yep.
But whatever your primary is, just go deep on
Hmm.
one, and you'll bleed into the others for sure. But
Yep.
yeah, I have made amazing relationships and connections from LinkedIn just in the last, I mean, in this space in the last year or so. It's just been unbelievable.
Yeah.
So
Yep.
really good
Same
advice.
here.
Thank you.
Yep.
Yeah. Is there a bucket list item that you have recently checked off of your bucket list in the recent past?
Well, I have a huge fear of heights. So
Okay.
2 summers ago, it wasn't this past summer, but 2 summers ago, I went ziplining up in Coeur d'Alene, Idaho, and it
Nice.
was, it was very tough for me because I have a huge fear of heights. So, but it was a ton of fun, ziplining through the trees of Idaho over a beautiful lake, and so it was something that, was a small bucket list item thing for me, but I really enjoyed it, and it was a lot of fun.
I love it. I love it. Yeah, I've had the opportunity to do it as well. With my daughter, actually. My daughter wasn't even afraid. I'm like wetting myself, and my daughter just jumped off with no fear. That's funny.
Yep.
What about a future bucket list? Any bucket list item you're shooting for here in the near future?
Well, I mean, like I said, since I did the zip lining thing, I really want to take it to the next level and hopefully be able to skydive out of a plane. But
Ah,
that's a whole nother level that I haven't crossed over into actually committing to, but it's something I'd like to do.
yeah. Yeah, I thought you might be going in that direction, and that just scares me even thinking
Yeah,
about it.
yeah,
But
it is, but
yeah,
it's, a lot of times life is about overcoming fears, and when you can do that, it's amazing the things you can do once you do it.
isn't that the truth? Amen. Awesome. All right. Well, again, Justin, thank you so much for being on the show. I think you brought a ton of value, just real life experience about a W-2 guy who's really doing what it takes to hopefully someday make it work optional here in the future. So thanks so much for being on the show. I appreciate it.
Thank you. I appreciate it.
All right. And to our listeners, as I always finish, be sure to connect with Justin on LinkedIn. We'll put his social media connections in the show notes. And for your journey, just continue the education path and continue that education path until you have enough information to make a good first passive investment. And I'm confident once you go down the passive investing journey, you will never go back. So again, thank you all for your time today, and we'll look forward to having you all on another podcast in the future.
Well, there you have it, ladies and gentlemen, another episode of The Gentle Art of Crushing It. It was an amazing episode. We know we sure learned a lot, and we hope you did as well. We want to take a second and thank you so much for viewing or listening to this episode. And please just know that we only ask for one favor, and that is to make this life magnificent. Thank you, and have a wonderful day.